The conclusions and recommendations. The present report recommends investors not to invest in NextDC if their purpose is to obtain a return on the investment in the short or middle term. NextDC has a healthy growth and good fundamentals to possibly invest with a long-term focus and at a more fair share price of between $6 to $8, since its share price continues on a negative trend since 1 year ago. The return on sales ratio indicated a healthy increase of the sales of the company. However, the company is not yet able to fully fund their operation with the revenue received. It hasn't yet paid any dividends since it went public in 2016, and it is probably not expected to do so in the short term. The return on assets of the company is still very low and will continue to require a high level of investment to fund their operation. As seen in the investment ratios, the price to equity ratio calculated with information of the last 12 months at the time of this report is 663, while the average in the sector is 171, which means that the company will return the investment around 4 times later than the average in the industry. This report presents a limitation as the depreciation and amortization of the company's property, plant, and equipment is high enough to represent 38% of the revenue 2021, making the operational profit be only 9% of the revenue, which after paying finances, costs, and taxes becomes in a negative 20 million. It means mainly because of the depreciation and finance costs from previous borrowings, the company is still not profitable. It is important to highlight that NextDC is the leader company in cloud computing data services in Australia, having over 90% of the local revenue when compared with its competitors and having a strong, reliable clients such as Google, Amazon, IBM, Microsoft, among others, to guarantee revenue for upcoming years. In other words, NextDC might be applying similar strategies like Amazon or Uber, which became profitable after over 10 years of operation. Nevertheless, they are nowadays strong leaders in their industries with high share market value. NextDC currently has a market valuation of 4.9 billion and continues to increase in revenue, as well as it expands to over 9 data centers across Australia and 2 more under construction. NextDC has been granted a funding of 1.85 billion to invest in the next 5 years. This is a good sign to get approved that amount of money. However, it might be still at least other 5 to 10 years for shareholders to make significant profits. The company's non-financial and sustainability indicators reflected a fair commitment to reduce their carbon footprint and engage employees to continue their professional trainings as well as volunteer work in the community. Despite the company's position in the market and healthy growth through funding, the present report don't recommend to invest in NextDC at the current share price of $10, as it is likely to be overpriced and it is still on a negative trend since its highest point in October 2021, which hasn't reached the bottom yet to change the trend. The current report indicates that the company NextDC has good fundamentals in the long term, so it is recommended to continue to monitor and invest at a more fair price between $6 to $7 and hold possibly for over 5 years.